Welcome to Earnings Central. In this video, we'll break down PNC Financial Services Group third quarter 2024 earnings call in under 4 minutes. We'll cover the key financials and major takeaways, so you can stay informed without spending hours listening to the full call. Let's get started. Starting with the financials, PNC generated $1.5 billion in net income, translating to $3.49 in diluted earnings per share. Total revenue came in at $5.4 billion, with net interest income growing 3% and fee income increasing by an impressive 10%. The bank achieved positive operating leverage for the third consecutive quarter, positioning them well to deliver positive operating leverage for the full year of 2024. On the balance sheet side, PNC maintained stable loan balances at $320 billion, while deposits grew by $5 billion, or 1% to reach $422 billion. Their CET1 capital ratio improved to 10.3%, showcasing their strong capital position. The bank's tangible book value per share increased by 9% quarter-over-quarter to approximately $97. Looking at credit quality, the bank reported net charge-offs of $286 million, with an annualized net charge-off ratio of 36 basis points. Their allowance for credit losses remained stable at $5.3 billion, representing 1.7% of total loans. One area of particular focus was the commercial real estate office portfolio. PNC has maintained strong reserves in this segment, with an 11.3% reserve ratio on the overall office portfolio and 16% specifically on the multi-tenant portfolio. The bank continues to actively manage down their exposure in this sector, reducing balances by 4% in the quarter. A significant highlight from the call was management's confidence in achieving record net interest income levels in 2025. This projection is particularly noteworthy as it's not dependent on loan growth, but rather on the natural repricing of their assets at higher rates. On the deposit front, PNC believes they've reached peak levels in deposit costs and expects rates to begin declining, particularly following the Federal Reserve's recent rate cuts. They anticipate their deposit beta on the way down to be approximately 50%. Looking ahead to the fourth quarter, PNC expects average loans to remain stable, net interest income to increase by about 1%, and fee income to decline 5 to 7% due to normalized capital markets activity. They're projecting total revenue to remain stable with third quarter levels. Management also provided insights into their growth strategy, emphasizing organic expansion, particularly in Southwest markets where they're seeing strong momentum. They're planning increased investment in their retail distribution franchise, including targeted branch expansion in high-growth markets. Regarding M&A opportunities, management indicated that current market valuations don't present attractive acquisition targets, preferring to focus on organic growth initiatives. They emphasized their success in winning new commercial clients and building loan commitments, though utilization rates remain below historical averages. In conclusion, PNC delivered a solid quarter with strong execution across their business lines, maintaining robust capital levels and credit metrics while positioning themselves for continued growth in 2025. That wraps up our recap of PNC Financial Services Group third quarter 2024 earnings call. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.